So a common argument I hear from the Tesla fan club in response to the fact that the company is structurally unprofitable is that, well, you could have said the same thing about Amazon. After all, Amazon didn't make any profits for years, which is true, of course. But whenever I hear this, I know I'm dealing with someone that either hasn't done the research on the difference between these two companies or simply doesn't understand the difference. Whilst Amazon didn't make any profits for years, they've been cash flow positive for the last 16 years. Tesla, on the other hand, continues to bleed an enormous amount of cash every quarter. Why is that? Well, Amazon and Tesla are two very different business models. Behind the hype of autonomous driving and battery technology, the reality is Tesla is a capital-intensive automaker with an unprofitable solar business on the side. Amazon, on the other hand, was never a capital-intensive business. Its business model was quite unique. Here's Jim Chanos at a recent event in December to explain why.
What do you say when people say to you about these shorts? I did it to you, and you had a great answer. Yeah, but what about Amazon? Everyone said they're short them too.
Yeah.
What's the difference? You had a great answer.
So when I started out on Wall Street, I was in investment banking in Chicago, and I was at Blythe Eastman Payne Weber. Our biggest account was McDonald's. So I had this junior guy to immerse myself in the history of McDonald's. And by the way, if you haven't seen the movie The Founder, go see it. It's really a good business movie. And it covers some of what made McDonald's unique, which was McDonald's figured out the realty model. They're in the real estate business, not the hamburger business. And for years in the 70s and 80s, any consumer company that was kind of getting some growth and looked like it could be this monster company, people say it's the next McDonald's. And I always used to say, grumble on breath, there was no next McDonald's. And nowadays, when you get confronted with a sort of questionable business model like a Tesla or whatever, where you can sort of model out, it just doesn't work, right? They're a car company, it loses money. Some will say, yeah, but you could have said that about Amazon, right? I get that all the time. And so I decided to look back at Amazon. And I remembered it from the late 90s, but I went back and recently just did a deep dive into the financial history of Amazon. And what I found was the following. Amazon went public in 1997. Their last public offering was in 2001. They've been free cash flow positive every single year since 2001. But the really intriguing thing was, until 2012, when they got into the AWS, basically the cloud, they had no capital in their business. Quite literally, we financed them through their retail model, that if you bought books or clothes or whatever, you paid them up front, and they paid their suppliers in 30 or 60 or 90 or 180 days. And basically, like Dell Computer, that financed their plant and equipment. And so for years, Amazon, really didn't make any money, but I kept saying they don't have any capital in the business, right? It's the ultimate efficient machine. Once they started investing in AWS and more warehouse, they started making a profit. The money followed the investment, and I know that's one of your dictums. And so there really isn't been a business model like this. Alibaba doesn't have this business model. eBay doesn't have this business model. And so there is no next Amazon. And for someone to say that a Tesla, which is capital intensive, tons of debt, raises stock and bond offerings every 3 to 6 months.
As a guy who's going to Mars.
As a guy who's going to Mars, whatever, and by the way, Bezos is too, interestingly enough. Yeah, he's got his own rocket company. Yeah. So it was a unique animal. And same with Apple. People say, oh, you could have said that about Apple. Well, no, Apple has 40% gross margins in the consumer products business, and Tesla's gross margins are 18%. And so, down the line, and the problem is a lot of these statements don't hold up. When you actually go back and analyze and understand what made Amazon unique, you realize it was unique. And that for everyone to say, I'm going to justify any valuation, $60 billion on Tesla, or whatever it might be, because it's the next Amazon, good luck.
Now, I know some of you Tesla fanboys are already smashing the keyboard with indignation about how Chanos is wrong and Musk is a genius that will make it all work out in the end. But you might want to listen to what else Chanos had to say about Tesla, including the idea that Musk will eventually bail on the company and move over to his first love at SpaceX.
Talk to us about Tesla.
I'm not a fan. No, I'm not a fan. So, Tesla, to me, every bull market has sort of its poster children for the bull market, both good and bad. And I believe Tesla is one of the bad ones for this market. And the reason for that is that Elon Musk has succeeded in a public vehicle to keep selling a dream, and when the dream is kind of becomes a little bit mundane, he sells you the next dream. But he's raising lots and lots of money. This is not an Amazon. This is a company that's in a capital-intensive business, auto OEM, no matter what he tells you, and is struggling. And they lose money selling the $100,000 vehicles. They're having problems getting the mid-priced vehicle out, and it's not mid-priced. It's actually closer to $60,000 as you can order the Model 3 today. And of course, the response now is to tell you he's got a semi coming out in 2019 and a Roadster coming out in 2020. Both of those, I believe, are not true, in my opinion. He would have to have the production lines already approved for those. They're not approved anywhere that we can find. So it's very doubtful he's going to have that semi out in 2019. Yet he's out raising money, both in the form of deposits and most likely a future stock or bond offering on those sorts of promises. And
is he already? Was he at $300-something a share right now?
Yeah,
so
yeah, almost 350.
Is he? Why isn't he raising equity all the time?
I don't know. He will be, I think. And then finally, you had stuff like the Solar City acquisition, which just really was unbelievably bad corporate governance. So he owned a big chunk of Solar City. We were short it. Solar City, in our opinion, was going bankrupt. The model of rooftop solar leasing has moved on to distributed solar. They got the market wrong. The stock was plummeting. The bonds were yielding over 20%. And out of the blue, he decides that Tesla should buy Solar City for $8 billion in assumed debt and stock. For those of you that are financial people, Solar City at the time was losing $300 million in negative EBITDA a year before the debt service and depreciation. And he basically saved his own equity investment by having Tesla buy him out, which I just think is abhorrent. And was
how did the board approve that?
The board approved it and the shareholders approved it, and without much of a blink, because A, he controls the board, and B, the shareholders believe pretty much anything he tells them. And that to us was sort of a real sign that this thing had taken a dark turn. Now I mentioned to you the Enron executive departures. We keep a list of the Tesla executive departures that we see. He doesn't disclose them, but we find them via LinkedIn, and people send us. And it's a spreadsheet now that goes a full 2 pages over the past couple of years of all the senior people that have left Tesla. They've got there, saw what's happened, and obviously went out. There's something wrong there. And on top of that, you look at the accounting, and then finally, my own prediction, based on nothing more than seeing guys like this operate, I think he's going to leave Tesla within a couple of years.
You mean himself leave Tesla?
I think he's going to move over to SpaceX.
What percent does he own of Tesla?
He has actually a reasonable amount. It's about $10 billion, $20 billion.
Is he selling stock right now himself?
His family is, he's not. Although he cashed out some for his foundation a year or so ago. But I think he will start selling stock once he becomes the non-executive chairman. And my own view is he'll just sort of leave it to his number 2, and he'll be able to say later, well, it was fine when I left it, But if you look at the latest Rolling Stone cover story of him a month ago.
Is that a magazine still, Rolling Stone? No, I mean, see, it's not online only? Can you buy the magazine?
I think you get it online. I think you get it.
You can still buy the magazine.
I remember you used to buy it at Michigan State. You probably used to buy it.
No, but we also bought a magazine,
okay.
Rob Report. You probably read it when you
Rob Report. Well, yeah. I can't afford that stuff,
no,
but it's aspirational.
No,
I see it.
But
anyway, so if you go online or go to the head shops or wherever you can get Rolling Stone, I don't know. The cover story and all the glossy photos are him at SpaceX, not at Tesla. Him with a space helmet, him on top of like a centerfold on top of a rocket. And that was very telling to me. But if you go inside, they're all rock. And I think he's getting the world ready for the lateral move over to SpaceX. His dream is to go to Mars. I think Tesla's heading for a brick wall. I think that makes a lot of I've seen guys like this before. He's going to hit the parachute before the shareholders do.
Maybe before he hits them.